All right, so I wanted to go over my trades for the week. So total profits or gross profit for the week was 573 US. So much better than last week, which was I think only 104, but definitely not where I want to be yet. But let's go over the trades. So I have my regular SPY put spreads that I open every Monday, Wednesday, Friday, regardless what happens. I open them at the open. So if you watched my earning trade video yesterday, I show you an example of how I open the SPY put spread every Monday, Wednesday, Friday at the open. So these ones here. So first of all, we're only going to look at the green section here because this is for last week. These were the trades closed last week. All right, so this was a SPY put spread opened August 19th for the August 26th expiration. 56 cents, closed it for 13 cents. I think it was like over the weekend or something. This one here was 332 short strike, 56 cents, closed for 22 cents. I had 2 contracts. This one here was 337 short strike, so we're getting higher and higher. 58 cents, closed it for 29 cents. I actually had the chance, I think, to close it for 21 cents. And then then I think SPY dropped. So I just ended up closing it for 29 cents just in case because I was scared. I had an Apple naked call at 660 when Apple was trading at around 510, I think. So opened for 57 cents. I only did 2 contracts. I wish I did more contracts. That's one thing because it's super far. I mean, it was over 130 points away. And it ended up being a very profitable trade, but I closed it too early. I closed it for 22 cents the same day because the profit was too good to ignore. I didn't feel like holding an extra 4 days just for 22 cents. But I should have done more contracts and I should have let it expire worthless. I would have kept more profit. So this amount here is the gross profit up to this Apple trade. And then I did the 3 earning trades. I did Alta, Workday, and VMW, and they all VMware basically, and they all ended up winners. The stock went up after earnings right away. It could have dropped, but the thing is, I have room to win. So I win if the stock goes up, if it stays put, and if it drops a little bit and stays above my short strike. For example, in the case of Alta 200, it was trading at 220. If it drops to 215, 210, 205, I still win. But instead, it jumped to 250 and then slowly came back down. But it was way above my short strike. Same thing for Workday. VMware, I think, opened at around 143, dropped a little bit, and then closed the day, I think, at 146 or 147. So these ones, because it was on Friday, I just let them expire worthless. So I didn't buy them back. So I save on commissions and I get to keep the full premium, as opposed to the other trades where I had to pay something to close a trade, which obviously I didn't have to do it. But when I see a decent profit, I prefer to take it just in case things go bad, because things can go bad pretty quickly. And I had this Netflix call spread that I opened when Netflix jumped up on Wednesday. First of all, I opened the first one on 545, and then it kept going higher, so I opened another one on 560. So I was worried about it. The next day, I ended up closing them for a loss, a very small loss though. I think it was, where's my profit here? Yeah, so for $15 loss. But Netflix actually closed, I think, at 526, closed on Friday, 526. So if I had done nothing, I would have won $160 if I just held on to them till Friday. Instead, I closed them on Thursday for a $15 loss just because I was afraid. It was too close for comfort. So disappointing, but at least it's good to see what could have been. And at least I didn't lose that much. I just missed out on $160 gross profit on Netflix. The better trade on Netflix was to sell a naked call over 600. Same way I sold the naked call on Apple. A naked call further away on Netflix would have been better than a call credit spread, which is a bit too close for comfort. 545 when Netflix actually reached 549 that day when I had my 545 call spread. So that gives me a gross profit of 573. Net profit, I would remove about $13 per line here. Except for these ones, I would remove about $8. Not even, I would remove about $6.50, because these ones I only paid commissions to open the trade. I didn't pay commissions to close the trade because I let them expire worthless. So let's say about $110 commission. So it's about $460 net profit. Now let's look at a few variations. So what if I had let them all expire worthless and did not buy them back before expiration? So I'm just gonna keep my values here so I don't lose them. Then I'm gonna put 0 here instead. Just curious to see what would have happened. So all my trades, if I just let it expire till expiration and did not buy them back, my gross profit would have been $978 US. So big difference just for buying them back. So maybe it's something I would consider to just let them ride till expiration, because that's a big difference. I mean, from 573 to 978 plus commissions, I'm going to save even more on commissions. Probably going to be like $60 of commissions instead of $110 of commissions. So my gross and my net will be better if I just let them go through expiration. So I'm going to put back the prices, the real prices. So it should be what, 573? Yeah, 573. Now, another thing I'd like to see is, what if I usually do 2 contracts on my SPY put spreads? What if I did 2 contracts on everything I do? So 2 contracts on the earning trades I did, right? 2 contracts on Netflix, if I had left it though, but I didn't keep it. 2 contracts on Workday and 2 contracts on VMware. If I leave the prices as if I did close them, but I just did 2 contracts like I always do on my SPY put spreads just to stay consistent, gross profit would have been 800 US. So once again, that would have been better. Would have saved on commissions as well. Now, what if I did not close them and just let them expire worthless? So I'm going to copy the numbers again here and put zeros just to see what would have happened if I had closed them, if I had let them expire worthless. So gross profit would have been 1386 US. So that's not bad. I'm happy with that number per week, because that's US, that's not even Canadian. So that would be almost 1700 Canadian about per week. So pretty happy with that. So maybe I should just increase my contracts. So as you can see, just a small variation can increase my weekly income. So if I just increase my contracts and let them expire worthless, that would make a big difference. But obviously this is because it went my way. But what if it didn't go my way? What if the SPY dropped? Then I would have to pay much more to close the trade and I'd be losing more. Same thing on the earning trades, especially earning trades. You don't know which direction they're going. They go up, or they can go down. You just know that it's going to move hard, and you know that there's going to be a volatility crash. But luckily, all 3 of them went up. VMware actually just stayed a little bit flat, but that doesn't matter because my short put was out of the money anyway. So I had room for VMware to stay put or even drop a little bit, and I would still win. So let me know what you think, if I should increase my contracts and if I should hold till expiration or close for profit. And definitely one of my biggest regret is not doing more contracts on Apple. Was definitely a good trade. All right, so if you have any questions, leave them in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link in the description below to get $50 in free trades. So people will definitely say, why don't I use interactive brokers? I'm definitely going to save on commissions if I use interactive brokers. Well, really 2 reasons. I considered switching to interactive brokers because with small amount of contracts, Questrade is expensive. But first of all, the interface is too complicated for me. I would use the phone and the browser version, and it's just too complicated. I execute my trades faster with Questrade. Plus, I don't have that much capital in my margin account. I'm actually using the capital in my TFSA, which gives me buying power in my margin account to actually make these trades. So if I switch to interactive brokers, I wouldn't even have a margin account. So I wouldn't be able to make these profits, even though I'm paying commissions, but I wouldn't be able to make these profits unless I withdraw from my TFSA and put it in my margin account. But then I'd be missing out on having cash in my TFSA. Although I'm not using my TFSA yet, I'm just waiting for the right time to buy something. I find everything too expensive to buy, and I'm just worried about the market. The idea is I'm able to use my TFSA plus have some buying power in my margin account with Questrade. So that's really the reason why I accept, sadly, to pay these high commissions with Questrade. All right, so if you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.